Hi everybody, thanks for joining me on today's webinar. For those that have seen some of our previous ones, you'll know that I'm Craig Faulkner, the BDM for the North here at Pure Retirement. For those that haven't seen me before, thank you very much for joining us. Today we're going to be looking at supporting you and your clients with long-term care in equity release. I'm pleased to say that I'm going to be joined by an expert speaker, Jacqueline Berry from My Care Consultant, and she'll be taking you through some of the more detailed information. But first of all, just to take a look at today's agenda. Naturally, these days in late life lending, there is a big focus on social care and care in general. We want to make sure that you're armed with the tools to be able to assist your clients. We'll then be looking at the role of the Care Navigator, which is where Jacqueline will come in. My Care Consultant, which is the company that Jacqueline heads up, care advice in general, support for financial advisors such as yourself, online resources, and the next steps that you can take. But first of all, I wanted to take a very brief moment just to give you a little bit of insight following a white paper that's been produced by the Equity Release Council. Some of the statistics are very pleasantly surprising. So first and foremost, at the moment 36% of all equity release is used for home improvements. Now that is looking at home improvements as a rule, but ultimately there is a heck of a lot in there that's going to include accessibility issues, ramps, bathrooms, things like that. Basically a way of your customers being able to adapt their home to make sure that it's future-proof for their current needs and anything in the future as well. Also worth highlighting deferred payment arrangements with local authorities. A great feature, but they only work if the property remains unoccupied. And as many of your customers will have partners who wish to remain in the home, it may not be quite suitable for them. But that brings us on nicely to the fact that equity release can actually be used to pay for temporary periods in either residential care or domiciliary care, which allows other applicants to be able to remain in the property and naturally means that that person going into any residential or domiciliary care is then able to go back into the property once that's ceased. And also, many equity release products nowadays, they actually allow long-term care changes with no early repayment charges. And what I'm alluding to there is, not just through ourselves, but through the wider market, you can find features sometimes called an equity release charge exemption. Ultimately, what it's saying is if you've got a joint applicant and one of them were to go into care or naturally pass away, then they do have the option to be able to repay that debt penalty-free, which is a great feature as well, and again, make sure that it's going to remain suitable for their future needs. So that was my brief intro over. I want to hand you over to Jacqueline, who's going to talk you through some of the logistics, and then I'll be back to be able to talk you through at the end.
Hi everyone, I'm Jacqueline Berry, Director at My Care Consultant, a care navigation business that helps consumers get access to care advice at a critical time in their lives and helps financial advisors build a comprehensive care proposition as part of your later life service offering to your clients. So today what I'd like to talk about is the role of non-regulated care advice and how this fits in with the overall advice process. We're also going to appreciate the role of a care navigator and how that fits in with financial advisors and the work that you do with your clients. We're going to look at the 9 available ways to pay for care and finish off by talking about the different models that are available to you to operate in this space, whether you want to be a specialist and offer everything in-house or outsource some of the more complex and time-consuming elements of care advice. So I thought it would be very useful just to start by outlining the difference between non-regulated advice and regulated advice. So non-regulated advice typically refers to the non-regulated aspects of care and planning, ranging from hospital discharge, working out what you're entitled to from the local authorities and NHS, right the way through to what are your care options, how do you access the care you need, and who pays, if it's you, how. The regulated side refers to the 9 different ways to pay for care and how best to pay for the care that you need. Now in England, it's quite a complex sector. The care sector is divided into 2. So you have the health sector, which is the remit of the NHS, and that is free at point of need. You then have social care, which is the remit of the local authorities, and that is means tested. And what's quite confusing is when there is a need for care, adult care, it can be quite confusing as to what is your primary need. Is your primary need social care, which is things like activities of daily living, so mobility, getting dressed, eating, moving from room to room, or is it a primary need for nursing? And there are assessments that take place to work out what you're entitled to from a practical and financial assessment. So what a navigator does starts right from the beginning to work out what you're entitled to financially and practically, and then helps the client to navigate through that process to set up the best care to meet their needs. We also look at raising the awareness of financial advice within the consumer space. Somebody that's self-funding really does need to speak to a financial advisor to work out how best to pay for their care. For those of you that don't recognise me, I actually used to work at Partnership, which is now Just, merged with Just Retirement, for a number of years, helping advisors to expand and grow their care propositions. And for this reason, we really understand the importance of financial advice. At My Care Consultant, we really understand how your businesses work. And we speak to the consumer about the 9 ways to pay for care and refer them to you or back to you, ready to have an informed conversation about the best way to pay for their care so that they're ready to make a decision for that. So, how do we fit in? I thought it'd be really useful to outline where we actually fit in within the care process of advice. In terms of a navigator, there are various different sources that we could receive our clients. We have general direct inquiries from the public, but we also work with the 6.5 million unpaid carers in the UK, who are the family and friends of the people that need care, that just don't know where to turn and need the help of a navigator to help them set up suitable care for their loved ones. We work with care providers and CCGs. CCG stands for Clinical Commissioning Groups, which is the alternative to the local authorities, but on the NHS side. So the CCGs are responsible for administering the funding from the NHS for those that qualify for nursing care. We work with solicitors and local authorities, but in the main we tend to get lots of our referrals from you, that's financial advisors, who refer their clients to us for the non-regulated care advice element, and then we look to refer your clients back to you when they're ready and they have a true need of paying for care advice. As part of our process, we also may look to signpost the client to a number of different sources of support. For example, to a solicitor who can help them set up a power of attorney or revise a will, or to gain information on things like trusts. We also help the consumer find care, so we might refer them to a care provider or to domiciliary or residential care providers, depending on their needs. If the consumer comes to us directly, or from a financial advisor that might be you, that doesn't actively have the qualifications or the inclination or the experience to offer paying for care advice, but that client has a need for paying for care advice because they're self-funding their care, then we look to refer that client to a member of the Society of Later Life Advisors, safe in the knowledge that an advisor as part of SOLA has the relevant experience and soft skills to be able to achieve best outcomes for that client. And in that scenario, you, as the referring advisor, would receive a referral fee for that. We're not the only navigator around. There are a number of navigators. This is a growing space. I thought it'd be useful to talk through a couple of other navigators that are operating in this space and explain how they work. Now, each of these navigators operates a different business model, which is generally derived from the skills and experience of the directors that are driving the business. So, for example, you've got Grace Consulting. Grace Consulting predominantly offer nursing care services for people that need nursing care in their own homes. And Grace are able to offer their support and advice for free to the consumer, paid for by product providers, if the consumer has a legacy product that is with one of the product providers, so therefore they have access to Grace for free. Now, you've got Time for Care. Time for Care is part of the HCR group of companies, as a part of Bridgefast. Now, Time for Care gets most of its business through employer benefit schemes, through corporate schemes, and they provide advice that's paid for by their corporates to their employees. At My Care Consultant, we offer free initial telephone consultations. We then offer 2 paid service options, the first being telephone consultations for £150, and we also offer a full action-based bespoke care report service for £295. What's really important to note is that all of these businesses operate similar models. Most or all of the services will be substantially less than a week's worth of care fees, probably substantially less than a day's worth of care fees. So the value to the consumer is very, very good. Now, why are we needed? This quote, to my mind, sums up exactly why a navigator is needed in this space. This quote was made by a gentleman called Richard Humphreys, who is part of the King's Fund, which is a charity responsible for raising the standards of health and social care in England. Richard says, who pays for what across health and social care is confusing and incoherent. Reform has been made harder because of the fragmented way the social care system has evolved, leaving a system that's crisscrossed with fault lines between NHS and local authority care, private and public funding, and private and public delivery. So what this means in practice is the consumer, when they have a care need for themselves or a loved one, is doing what we call the drunken walk, which is where they're speaking to one or more of different sources, asking the same question, but they could get one or more different responses, which could be inaccurate, out of date, or unreliable. And the point to this is why a navigator exists, to help give the consumer peace of mind that they're being provided up-to-date and reliable information that they can trust to help them get the answers that they need at a critical point in time. Now, the government has gone some way to legislate against these issues that the consumer is facing. The Care Act 2014, as part of this, in March 2015, the Act stated that local authorities need to provide comprehensive information and advice about care and support services in their local area. This is to help people to understand how care and support services work locally, the care and funding options available, and how people can access care and support services. Local authorities must also help people to benefit from independent financial advice, so that they can get the support to plan and prepare for the future costs of care. Now, unfortunately, in reality, the reality is falling far short from that. Local authorities are not, on the whole, providing the minimum information required for consumers on their websites. Their knowledge base within their teams is quite inconsistent, and consumers are being told when they're calling up with basic questions to go online and look up the answer to their questions. So this is why navigators exist, and this is an increasing problem as our demographic ages. So if now we look at the non-regulated side of things, which I keep mentioning, versus the regulated paying for care advice side of things, and I'd like to break down different categories that typically a consumer would need help in before they even get to the stage of knowing whether or not they're self-funding, and if they are, how much they'll need to pay. So on the left-hand side here, you've got the light blue boxes, which are split into three. We've got information, care advice, and care advocacy. These boxes refer to the different sort of categories of client that we would come across. So you've got the first category of information, which is those clients that have a question and need an answer, which could be, I need care, what care options are there, what's available locally, how much am I looking at? You've then got the second category of client which is most people. They don't know what they don't know, and they need somebody to fill in the gaps and create an action plan for them to help them set up suitable care as quickly as possible. You've then got the third category, which is care advocacy. We all hear this term vulnerable clients, increasingly made by the FCA and within our industry. And there are many, many older people that perhaps don't have family nearby, perhaps don't have many family members that can help them to do things like filling out forms, attending assessments, and basically setting all the things that are needed to help them set up suitable care. Now, these three categories of clients, now, depending on where they're at in their care timeline, in our experience, a consumer that we're interacting with, it will take about 6 months to help them navigate this process, which could be it could be that they need help in any number of different categories, ranging from mum's in hospital, how should she be discharged, how do I get the care that I need, right the way through to what am I entitled to from the NHS and local authority, things like have our clients got the relevant lasting power of attorneys in place and a revision of up-to-date will, help with sourcing care, finding out what's available. The local authorities are supposed to help people do that, but alarmingly, when Age UK did a survey which basically quizzed local authorities on their level of knowledge, asking sort of basic consumer questions that consumers would have in this area, there were lots of local authorities that didn't know that regardless of somebody's wealth status, everybody is entitled to a care assessment to assess their needs and is entitled to local authority support to help set them up their care, regardless of their wealth status. So it's things like this that you know, there are gaps, and we help to fill in that gap. We also talk to the consumer, once we've done that, about the costs of care, how to pay for care, what might be available to them, because they might still be living at home, or they might have already sold their house, and it depends on what they've done so far as to what's available to them regarding paying for care. Once we've done all of that, we then refer across to you as the financial advisor, who can then carry out your everyday role, which is, okay, this is what we're looking at in terms of your shortfall, how do we best pay for care, and provide a recommendation on the best way to pay for care. Once this bit's been done, this bit can be very quick. The consumer is ready to have an informed conversation and ready to make a decision on that. So, in terms of the ways to pay for care, I've just touched on the importance of raising awareness of the self-funding consumer, of the different ways to pay for care. Essentially, it's broken up into two categories. You've got the ways to pay for care for a client that is using their residential property. So somebody that's still living at home, or that perhaps is thinking about selling their property, they may still have a spouse or a qualifying relative that lives in that property. You've also got the ways to pay for care by not using your property, and I'm going to run through each of the different options. So, a recent change as part of the Care Act was made so that local authorities have to offer consumers the option to invest in a deferred payment scheme, which basically means that the local authority will pay for their care fees, and the consumer will repay those fees either when they sell their property or, sadly, when they pass away. This is only available to those people that have savings outside their property of less than £23,250. But the idea is to give people breathing space, to allow them to have their care and choose suitable care and not have to sell their house, perhaps because they're being rushed to sell it to pay for their care fees, which could mean any number of things, such as emotional stress, the house being sold for under the market value, and they're missing out on things like being able to keep it to benefit from an increased value and so on. So all local authorities have to offer this now universally, and they're only allowed to offer this at cost. They cannot make a profit on this scheme. Then, of course, there's the option to rent out your residential property if you're moving into care. This could be suitable if you want to keep your property, as I mentioned, to benefit perhaps from an increased value in years to come. You might also have a spouse that lives there, or a relative that qualifies to live there, meaning that you don't want to sell the property. Now, what you can do here is look at perhaps renting it out or renting out a room, but there are downsides to this, such as periods without a tenant, tenants not looking after the quality of the property, which can pose as a risk. And of course, if you perhaps don't have family members that can help you with the day-to-day running and transaction of that, even if it is through an agency, that can be something that can be quite tricky to do as well. Of course, then you have equity release. Now, equity release can be a great option to allow you to stay in your home for longer. One of the benefits of equity release is really to allow people quality and choice of care. Now, if you're somebody that is a state funder, ultimately what you lose is the flexibility of choice of your care, where you receive it, what standard of care you receive, and the frequency of care in many instances if you're at home, for example. So equity release can be a brilliant option for people that want to stay at home, perhaps want to improve on the package they're receiving already, or they may not have an eligible need. An eligible need relates to when the local authorities will actually step in the first place. They will assess you, and if they don't think you're ill enough, you may not qualify for any support, but you still might want to bring in carers to help you with your social activities, which could be making tea in the morning, your gardening, things like getting up and dressed in the morning, and that can be a really good way to enhance quality of life and stay in your home for longer. there are things to bear in mind, such as the effect this could have on your qualification for certain benefits, and so on. I just wanted to, at this point, draw your attention to a technical guide which my care consultant has written, entitled The 9 Ways to Pay for Care. We have provided a detailed review of each of these 9 options, with an analysis of the advantages and disadvantages, as well as the suitability of each option for each client. And I would urge you, if you haven't already got a copy, to contact us and ask for a copy, or visit our website to access that, because it'll expand on everything I'm saying here today. Of course, the last option with using the property is to sell the property or downsize. Now, there are 5 different options to pay for care which don't involve using the property. So firstly, using your liquid assets, your cash or your income, using investments. Now, investments typically for this type of client isn't always a desirable option, at least not on their own. It'll depend on the client's attitude to risk, and of course, a client in this space, typically speaking, will have less years to take that risk. So what we tend to find here is those that invest to reclaim a residual income tend to invest any leftover monies that they have after perhaps they've taken out equity release or an insurance care plan, for example, to secure their fees for an indefinite period. So that is an option, but as I say, it's really important to consider the risk appetite in the normal way. Pension funds, when the local authorities look at how much you pay for your care, the first thing they look at, regardless of your savings and your property wealth and your capital, is does your income cover your care fees? If your income covers your care fees, then that's how you'll pay for them, and that will work very well. However, most people find that there is a shortfall, and therefore they have to look at the other options as to how they combine their income and their pension fund income with the other options to pay for care. Long-term care insurance. Now, for those of you that don't know, this is essentially an annuity product whereby, in return for a lump sum, the insurer will pay your care fees for the remainder of your days. The beauty of this is that it enables you to ring fence a proportion of your estate so that you know you won't need to pay out any more regardless of how long you live. So it's an insurance against longevity risk, and it is offering you peace of mind. I mentioned before, this is often desirable a product for those that perhaps want to purchase using a lump sum of their money, and then they can invest the rest, or they can start looking at inheritance tax. So for anybody that's a self-funder, this product has to be considered as an option. One of the other benefits is that actually by getting a quote for one of these products, it gives you an understanding of how long the underwriters think your longevity is. So it enables you to compare all of these options against each other. Lastly, third-party top-ups. Really, third-party top-ups become relevant. If you want a sort of a nicer standard of care, and the local authority rate that's paying for your care is less than the cost of your care home, for example. So a family member or a friend will typically pay the difference to enable you to have the more expensive option. So that's the 9 ways of paying for care. As I say, I would urge you to have a look at our technical guide, which runs through each of the options with a full analysis of advantages and disadvantages to help you in your analysis. That's enough about us. I just wanted to highlight some of the regulation which was passed shortly before RDR, actually, by the FCA at the time, FSA at the time, now FCA. Now, what they sort of stated was, I'm going to read out the second part of this. As with pension transfers, all competent retail investment advisors who give independent advice should be able to identify clients for whom a long-term care insurance contract should be considered, and be in a position to refer these clients on to someone who can provide advice on these products. Advisors should not recommend a product that is an alternative to long-term care insurance contract where a long-term care insurance contract would be suitable, because they have not passed the relevant examination. The reason I'm highlighting this is for anybody that's perhaps offering equity release out there but doesn't have the CF8, for example, or vice versa. What that means is, you're unable to give a broad range of options that relate to the 9 ways of paying for care. Every self-funder should see the numbers with relation to this product. So it might be that you might decide to outsource that to somebody that can provide that quote and that information. And what we're finding is, because of the regulatory requirements in this space, we're finding that firms, or more importantly advisors, have one of three different options as to how to operate their model in the space of long-term care advice. You've got the first option, which is to operate as a specialist. So this is advisors that offer the non-regulated elements of care advice. So that's the list underneath the blue boxes that I ran through earlier. And the regulated paying for care advice in-house. You've then got those advisors that look to outsource the non-regulated element of advice. So they've got the relevant equity release and the CF8 in care insurance exams. They can offer paying for care advice, but they don't want to offer the non-regulated element advice in-house, which could be for a number of reasons. Mainly the feedback we get is that it's time-consuming, and they like to outsource that to somebody who's doing that every single day. Then you've got the third category of advisor who looks to outsource everything. So they may not have the interest or the inclination in this field, they may not have the qualifications, they may not have the time, but they recognise that there is a need and they have to address the clients that perhaps need help in this space, and they look to outsource them to either a navigator or to another advisor that perhaps has the experience and knowledge to operate in this space. So to finish, I just thought I'd run through how we at My Care Consultant support the three different categories of advisors. So firstly, if we start with advisors that outsource the non-regulated aspects of care advice. So essentially what happens is, those advisors will refer their client to My Care Consultant. We offer each client a free initial 15-minute consultation, which is really important to assess their needs, give them answers to urgent questions, and if we can, send them on their way and give them an action plan to meet the need, to help them get their care without taking a paid service. However, as life often is more complicated than that, we sometimes find that the client wants more hand-holding, and therefore they have the choice of either our telephone consultation, which is 60 minutes, and you receive a call brief which contains all of the notes as to what was discussed on the call. That costs £150. Or they can have a full action-based bespoke care planning report, which costs £295. Both of those paid services are preceded by a fact find, so we ask the consumer for a set of details and information about their situation so we can make sure that we're giving accurate guidance. If they are then self-funding, partially or fully, once they've navigated everything, we then look to refer the client back to you, ready to have an informed decision and ready to make a decision on the best way to pay for their care, and that's where you would then offer your financial advice and charge accordingly. If we look at those firms that outsource everything, quite simply it's exactly the same process. So a client would be referred to us, we would offer the free initial consultation, the client either would take a paid service or wouldn't. We communicate back to you at every stage so you know what's going on. If the client at the end of that is self-funding some or all of their care fees and needs to speak to a qualified financial advisor who has the relevant specialist exams in this space to offer this broad range on the 9 ways of paying for care, we then look to refer the consumer to a member of the Society of Later Life Advisors who can provide a recommendation on the best way to pay for care, with the comfort that knowing that these advisors have the soft skills, the experience and the qualifications to achieve best outcomes. Now you as the referring advisor would receive a referral fee for that. So it's a great way to A, give your clients access to this help, B, receive passive income into the business, and C, meet the regulatory requirements to say that you're not ignoring that you know you have clients that perhaps need this help, that you're giving them access to that help, but you're also able to build passive income streams into the business as well. So lastly, you might be wondering, well, how do you help specialists? Well, actually it ranges. So specialists can refer their clients to us in the same way as the first two categories, because it might save them time. Typically the bit we do, as I said, can take 6 months, and a specialist financial advisor might decide, actually I'd rather outsource that because I don't have a way of charging effectively for that. So we would receive the client and would go through the same process, which involves the free consultation and then a paid service if they wanted to. Just to note, any documents we produce, you see copies of that. The other way we help specialists is as sort of an extra pair of eyes, as a second point of view. every client in this area has a completely different situation. And one of the advantages of working with a navigator is we have lots of experience working with local authorities across the UK. We understand how the CCGs work, and we have practical experience with working directly with clients who are dealing day to day with the real issues and complexities within this space. So we can share our opinions and experience to help those specialists give their clients the best advice and guidance moving forward. Now, interestingly, all three categories of advisor has told us, it'd be really useful to have access to information, technical documents, and help that's held in one place. Now, as a result, I'll come back to that. As a result, we are just about to launch an online technical resource, which is for financial advisors. It will hold a range of different documents, which include our technical guides, which I mentioned before, one of which is the 9 ways of paying for care. Guides such as key information sheets, summary sheets, flowcharts, checklists, audio and video content. It will be CPDable, and you can white label or co-brand a lot of the content on there. The purpose of this is to have one reliable source with everything you need in one place that's updated, regularly refreshed, and, as I said, reliable. Now, we will be offering a free access trial for those that are interested for 1 month. So if you're interested, please visit our website and send us an email, and we will provide you with access to that trial when the system is live. After that, we are placing a nominal charge to have membership to the system, but it's a very small charge which basically covers our costs to keep everything updated and regularly refreshed. I just wanted to finish by outlining a quote of one of the advisors that has recently started working with us, and I feel this brings to life exactly why care navigators are needed and how we can help. This is a chartered financial planner who contacted us and initially contacted us and said, we are looking to create a bit more of a defined process for managing later life long-term care inquiries. We don't receive a significant volume of inquiries, but a number of solicitor firms we work with refer clients as well as existing clients that need help. These usually come to me, and as long-term care in particular doesn't regularly feature in my day-to-day work, I can get out of touch until the next case arrives and then spend significant amounts of time getting back up to speed. Therefore, to ensure we have a more robust process and to improve client outcomes, my thoughts would be for us to refer these inquiries to your help desk in the first instance, so they are better advised on the non-regulated aspects of long-term care planning, and then we pick back up with the client following the consultation or report. This is an exact scenario as to why you might think to use us and how we can help. So that brings me to the end of my session. Sorry, I've jumped a slide there. But thank you very much for listening. And if you need to contact us for anything else, please contact us and we'll be pleased to help you.
Thank you very much for that, Jacqueline. I'm sure you'll agree some very important information there, and hopefully you've all been able to take as much away as I certainly have. I myself advised for a number of years in equity release, and I must admit long-term care was not particularly a blind spot, but certainly an area that I could use more support with. Thankfully, with the help of Jacqueline and companies like them, you will be able to find that you can arm yourself with a little bit more information to be able to instill belief in your customers. By all means, if you want to take it much further and actually deal with it hands-on, that's brilliant. But if not, at least you know that you've got a referral partner and network that's going to be able to help with you. So very briefly in summary, let's look at just, first and foremost, social care is an ever-increasing need of focus when it comes to equity release, and I only see that magnifying as the years go on. You as advisors naturally have a duty of care to be able to cover off many areas within your advice for the customers, but certainly when it comes to care and future potential needs, it's a key area. You've also got a little bit more information now in terms of who pays for what across health and social care. I appreciate it can be confusing, it can be incoherent, and again, lean on companies like My Care Consultants to be able to get the expert advice. Now, this next one's a bit of a mouthful, so bear with me. But crisscross system with fault lines between NHS and local authority social care, private and public funding, and private and public delivery can cause further confusion. What we're saying there is there are many different areas and parties that you can speak to be able to get information, but sometimes the information that you're getting isn't consistent with the last. Again, by dealing with an expert like My Care Consultant, hopefully you'll be able to bring everything in one house, be able to get a much more joined up approach, and make sure that you're not getting conflicting information. And as always, support is available, allowing you to concentrate on the day-to-day of your business. Here at Pure Retirement, within our distribution team, we'd be more than happy to talk you through any of the areas that we've discussed today. But again, if you do need that expert advice and more detailed information, it's always better to speak to the experts. So, that's everything that I wanted to go through today. First and foremost, as I say, thanks for joining us. You will be able to receive your CPD accreditation, and we would welcome any information in terms of feedback on today's presentation, any other subjects that you'd like us to cover as well. As always, we are there to try and support you and so that you can support your clients. So by all means, do get in touch with us if there's any particular subjects you'd like to be covered. And you can get in touch at marketing@pureretirement.co.uk. As always, we will always try to give you ongoing support, and not only through these webinars, but through the roadshows that we do and the events that we attend. So, at the end of the day, we're there to support you. Hopefully, you'll appreciate that support. But as I say, anything else that you need, please do get in touch. That's everything for me. I'll see you on the next one, and thank you very much for joining us.